Hey, what's going on, everybody? Man, 1 million black men, where black men come to win. Welcome, welcome, welcome. Hey, we got folks coming in the room. If you're here, go ahead. As we let folks come into the room, go ahead, give a shout out real quick. Let me get a one in the chat. Let me get a hello in the chat. Let me know what's going on for you. If you're here, 1 million black men is in a building, baby. We're about to get it started, man. I'm so excited. As I always do, just doing the black man thing. I got to be straight with everybody here. Straight up. That game was what was up. That game was what was up. Everyone watched that game. Hey, Miami came back, came back strong. There's a big lesson here tonight. We're gonna talk about. This is part 3 of breaking down Wall Street. Again, this is part 3 of breaking down Wall Street. So I'm really excited about tonight. We're gonna get into some lending tricks, some stuff for lending. Remember what we do here. Our purpose of this 1 million black men is to help black men win. Again, I know we got women here. I know we got folks from other countries here, other places, other cultures. Love to have you. Love that you join us. Love that you with the movement. Appreciate it. But I want you to know we do everything from a perspective of about as a black man, how do you do the angles so you can win? So whether it's your son, your uncle, whoever it is, right? I've done it myself. I figured out the angles. I've talked with dozens of black men. I've helped other black men succeed. And so everything we do here is really to help. How do we help black men win? But that Miami game yesterday, I got to tell y'all, I'm going to be straight 100 with y'all. Like Miami, that game against Miami was a perfect example with Denver at home, with every advantage. And just those that are not basketball heads. Hey, what's up, Dr. Marlon? Welcome to the building, baby. What's going on? Just a quick shout out to Dr. Marlon. I want everybody to know, you all will see his results here very soon. And just talk about, having integrity. Just having integrity and living a life where you do things, you act, you make things happen. Man, Dr. Marlon, signed up for one of the programs that we do. And, I said, you know what? He, had some things he had to get in order, whatever it was. He's in a different type of business, a very multinational, multi-country type of business, right? If you mind, Dr. Marlon, just telling your story a little bit. And basically, like I said, you know what, man, on GP, since you signed up, you're ready to go. I'll put him in a room, probably in a room that probably would have cost him. It would have cost him at least 5 to 10 racks to get into the room for the night, at least. He got in the room. There was probably about, he's in the chat, so he can say it himself. I don't know, about a dozen, different ambassadors, leaders of countries, different places, all that kind of stuff. He was in the room networking, got some contacts, everything. But he said to me, he said, David, look, man, I appreciate you. I really appreciate what you did. Thank you so much. But he said, look, man, I'm not gonna leverage this until like I put some of my own bread on the table. I appreciate that you went out, you know what I'm saying? You did that. You put me in a room with, millionaires and billionaires, and also some folks I can do some business with. But man, to have integrity, I'm just gonna wait until I just finish up with this. Make sure you get your bread. And so I just want to give a shout out to Dr. Marlon, man, straight up, because that was just a lot of integrity to do that. And look, I try to operate it with as much integrity as I can. I'm not perfect either. But, that's one of the things when people look out for you, when they go the extra mile for you, when they do things for you, you need to be a person that says, hey, look, hey, you know what? I'm going to pay it forward. I'm going to make sure I do my part and cover my end of it, right, to make things happen and do stuff. And I think that last Miami game we just saw. Thank you, everyone coming in the room. Thank you. We're just giving a shout out to somebody who watches us in our community that making some things happen. He's about to land for sure. I'm just going to speak it. He's about to do at least a couple $1 million in contracts, just because the business he has is stable, it's nice, and also he just needs some of the key things to make that thing accelerate. But man, Miami came out. This is real talk. Miami just outworked, right? They outworked Denver. And, sports is a great analogy of what happens in life sometimes. You know what I'm saying? Like sports is really that great analogy because it kind of like you can have a team that has the better players, but the reality is they got the better players, but they don't got the work ethic. And I think for a lot of reasons, to be straight with you, I do think that Denver took it for granted that they were at home, that they had the place, that they had, the better team, better players. and they went in and they just knocked it out. So, well, no further ado, man, let's get into this, guys. We're going to get into this lending game. Go ahead, my team, send out those final emails. Just want to give a quick shout out again, Ray. Let's go, baby. Alvin, let's go. Obviously, everyone here, let's get a chat. Real quick, do me a favor. Please share this if you're live. I am on Instagram today. I'm usually just on YouTube and Facebook. But if you're live, okay, if you're live, please share on Facebook. Please share on YouTube. And please share on Instagram. I've had a crazy day today, guys. Crazy day, back to back. I've barely looked at my phone today. Just been a crazy, crazy day. But we're going to talk about getting money, lending, the bank. So my team, send out one more email if we can. Please share, like, subscribe so that we can have that air. But we're going to talk about lending today and how to get, how to basically, for everyone here, to get to different amounts of money, right, pretty quickly. I want to try to get these things a little bit shorter. I have been, as you all know, because I have content, and I want you guys to know most of this content literally like is just from what I know and from what I've done and everything else. So where I'm at right now is that we're going to try to keep this to about 30 minutes, right? Keep it solid, keep it straight, so we can all do well in understanding this. But go ahead, let's put up the slide. So I want to go first into what the lending world looks like today. And so you need to understand as a consumer right now, again, if you are a person that needs to get better credit, let me say this to you. There's a lot of people out there. Now I'm back on social media a little bit. I'm still not on there a whole lot, y'all, because I got business to do. But since I'm on social media a little bit, there's a lot of people that do credit. So I think they have a lot of good information. There's a lot of folks that can talk about credit because credit is very much is out there, okay? So credit is very much easy. But I want to talk about a little bit deeper of a level, right, about how to get lending and how lenders operate and what they do and how they do it. From a banking perspective and a fintech perspective, I want to get into that. So again, like, share right now. We're about to get into the content about this. So put up the slide. Let me walk through this with you guys real quick. All right, so here we go, right? So right now what we have in the industry is we have two different, okay? There's two different type of what I would call lending institutions that exist today, which is an amazing opportunity, right? For all people, but even particularly for Black people, for Black men. While, as I taught you guys before, there's a lot of relationship in lending. With the movement of fintech and some of the algorithms that exist, there's opportunity, but also it has limitations, okay? So what I mean by this, let's walk through fintech and then let's walk through bank lending, right? And then I'm going to give you a couple applicable things you can do today, right? To kind of leverage either one in the lending, okay? All right, so here we go, right? So fintech, right? Because of whether it's QuickBooks, whether it's Square, whatever it is, anybody that you use in your business that has access to your data, okay? This is the important part, right? If they have access to your data so they know how much money, right, is coming through the account, okay? They know how much, not only money comes through the account, but they understand how much revenue you get. They see the cadence of deposits, withdrawals, stuff like that. The fintech companies now have algorithms, right, to get info about you. So they say, okay, this person's bringing in $2,000 a week. And they consistently bring in $2,000 a week. They consistently bring in $3,000 a week. So the fintech companies, what is fintech? Fintech is financial companies that operate primarily online or through an application, okay? They don't really have brick and mortars, right? Again, QuickBooks, Square, all the different, payment systems, stuff like that, where you use them in your business, a CRM system, right? A customer relationship management system, okay? These are all places, be very clear with you guys, that are there, okay? Welcome, Greg, Albert, Victor, welcome, brothers, Jared, everybody, welcome. But these are all places that essentially are they have your data, okay? They can see what you do, so they're making decisions based off your data, okay? Only your data, not a relationship, right? Not who you know, as we talked about last week, right? For those that are up here, we had on there the connection, right? Connection to a board member, okay? Right? Connection to a board member, right? Branch manager, corporate executive, right? We had that up there last week talking about that. That is a great part, a great way to get things in lending. But fintech goes by your data, okay? Usually they have a higher interest rate than banks, about 1 or 2 percentage points. They have a higher interest rate, right? And so they have that in banks. So let me give you guys a real life example of this, the way I use fintech just recently on some things, okay? So I have a business that primarily operates, they take payments through Square, okay? Payments through Square. And so what Square did, because they see the cadence of our deposits and stuff like that, what Square did, Square said, hey, they've been offering me for a year. A year, they've been offering me lending, okay? And so they've been offering me lending, okay? I hadn't taken it, right? Hadn't taken it. I wrote back to Square. I said, hey, you know, the problem is you all not offering enough. So I hit them back. You all not offering enough, okay? Right? If you got Square today or you got a fintech payment processor that offer you loans, this is a secret that you can do, okay, right now. So I hit them back and I said, hey, the reason why I'm not taking your loan is because you're not offering me enough, okay? So somebody in somebody, customer service, whoever it is, got that. And you know what they did? What they did was that they basically then came back with a higher offer, about 15 to 20% higher. And I said, okay, I'll take this. Now, when I look at the loan, okay, they're taking about a 15% flat rate, not APR, okay, not APR, okay, 15% flat rate. Now, I want to ask a question in here. Please participate. Put it in the chat. How many of you guys actually understand or know what APR means? If you know, like when I say what it means, I want you to put a one in the chat real quick. If you understand what APR means, because I want to go through this, because a lot of us, we actually don't know. It's okay if you don't know, right? Because you're not in banking, but you don't even know what APR means. The APR is everywhere, okay? Right? What does APR mean? Just real quickly, okay? I want to do this a quick lesson for everybody to understand what APR means, right? Okay? APR, what is it? It's annualized percentage rate, okay? Annualized percentage rate, okay? That's what it means, okay? What does that mean to you, okay? Thank you everyone who put that in there. Michael, appreciate you. Chanel, thank you guys, right? What that means is that if they're charging you a 20%, they say, hey, if you get this money on your credit card, whatever it is, and you get a 20% APR, 20% APR, and let's say you took out 10,000, okay, right? That means a 10K, right? They're going to give you 20%, which equals $2,000, okay? But APR means you're going to take that money, whatever that percentage is, and you're going to divide it by 12 months, okay? In this case, you divide it by 12. I think you end up, somebody correct me, it's somewhere around, it'll be like $166, I believe, a month, right? That's what you're going to pay in interest, okay? So you basically take the whatever the rate is, divided by 12 months, or whatever the money you're borrowing, and that's your monthly payment. Someone correct me in the chat if I'm wrong, but I think it's just in my brain. $166 a month is what I believe it is. Okay, all right. So what fintech put that fintech slide back up if you can, Tim, real quick. What fintechs do is a little bit different. So banks, we usually listen to banks. Banks operate on APR. What fintechs usually do, fintechs give you, right, a flat rate. Okay. So a fintech, right, they give you a flat rate. What fintech, what they do, they say, hey, look, most fintechs say, hey, we're going to give you $20,000, okay? We're going to charge you 15%. What is 15% of 20,000? We're going to charge you, right? We're going to give you 20 grand, okay? But we're going to charge you 15%, right, which equals 3 grand, okay, for that money. And what we're going to do, because we know your numbers, because most fintechs, they actually know your numbers, okay? What the fintech says, hey, we're going to, right, take out, okay, right, You see that? You're going to pay back that 20 grand, but we're going to take out our 3,000 weekly. Okay? You're going to have weekly payments, and we're going to take, let's say, $150 a week for whatever, 20 weeks. Okay? In interest. So that's what fintechs do. Okay? Fintechs, they charge you flatter rates. Okay? Flatter rates. Okay? Usually not as much APR. Some of them do APR, but usually it's a flat rate, a flat amount, and we're going to charge you a weekly amount, right, to pay us back. And we're usually going to take it out of your revenue. So the revenue that's coming into your company, we're just going to take it directly out of your revenue, right? Directly out of your revenue. Okay? So you ain't got to think about it. You ain't got to pay it. You're just going to take it out of your revenue. So if you have a business and you're making $2,000 a week, then your $2,000 minus 150, whatever else the payment is, we're just going to take it straight out of your revenue. That's what we're going to do. Okay? That's how fintech works. Now, bank lending. Okay? Listen to this. This is very important for everyone listening here. Thank you for being with us. Appreciate everybody here. YouTube, Facebook, and now Instagram as well. Okay? When it comes to bank lending, okay, I want you to read what's on this chart. Okay? Okay? They use the bank account of the business, and they typically know what the money is for financing. What does this mean? Okay? This is what you got to do. I'll give you guys a quick secret. A real quick secret. Okay? Hold on. If you came in, welcome. If you're like, yo, I'm trying to get a quick nugget, I'm about to give you guys a big nugget when it comes to banking. Okay? This is what you do, okay, when it comes to banking, because banks are looking at, banks don't have the data insight like a fintech company does, right? So banks are looking at how much cash do you sit in the bank? How much cash is there? What's the relationship, okay? Banks look at what's the relationship, okay? So here it is, right? What I tell people and I've advised people in order to get different loans, lending, different things strategic, right? Let's say you got a checking account, okay? Checking account, all right? And let's say you have January, February, and March, okay? Okay? This is what's important. This is what's important, okay? Every checking account has, as you guys know, a beginning balance and an ending balance. Okay? They have a beginning balance and an ending balance. And look at your bank statements. If you haven't already, your bank statement will show a beginning balance and an ending balance. But it also shows for those that are on here, right? Ladies, men, everybody, it also shows you what is your average balance. Right? What is your average daily balance? Okay? Here's one of the secrets when it comes to banking, when it comes to the lending space. Okay? What they care about, I taught this last week, they look at, remember those 5 C's? How many of you guys remember the 5 C's, right? We talked about the 5 C's last week, right? Character, collateral, all those things, right? They care about cash flow, okay? Cash flow. So what they're looking at is what is the average balance, but they particularly look at it over 3 months. So what I tell people this, hold on. If you're dealing with a bank in your business and you're trying to get lending, okay, unless they have a program or something new, an incentive program to get you to bring money. We talked about that last week, right? Look at banks who are new to the community, banks who have lending programs. Look at those type of banks. But what they're going to look at is the average balance. So they're going to say, right, if your beginning balance, but keep the number simple, if your beginning balance, okay, is 20K, right? Your ending balance is 10K, but your average balance, because you got money moving in and out for all different reasons, let's say your average balance is 15K, okay? That's your average balance, it's 15K. What the bank is going to do when they look at you for lending, they're going to say, you have An average balance of 15K. This is what happens in the underwriters. They see that as your cash flow. This equals your cash flow. Okay? All right? Okay? That is what equals your cash flow. Some people will say to you, hey, put a bunch of money in an account, let it sit there for 2-3 months. Okay? Banks have gotten hip to that now. They're very hip to that. Okay? You want to put a large amount of money in an account that you actually do transactions, even if it's just 10 a month, even if it's 5 a month, but there's activity, because now they're going to look at what your average balance is, and they're going to go, okay, 15K is the average balance. So what we're going to do, if we look at that over 3 months, we're going to now offer a lending product where we know for sure they have the 15K can pay for it, right? So what does that mean? Especially on a monthly payment. They're usually looking at about this number. They want to lend to you on a monthly basis at roughly about 20% to, I would say conservatively, 30% of that number, okay? So if your average balance is 15K, they're looking at loan products where you can make a payment of, $2,000-$3,000 a month, okay? And it's safe for them. If you look at the chart that's right here, that we have here, right? I know for those on Instagram, you cannot see it, but it's okay. It breaks it down. It says that, all right, banks, they like to lend to low risk businesses, right? So what they're trying to do, banks are always trying to limit their risk. That's why if you're a startup, you might want to look at fintech to get capital early, because the money you bring in, they can see it. When you're more established, unless there is an incentive program, okay? We talked about one last week. For everyone that remember, right? It was here. I still got it right here, right? Last week, okay? We talked about follow Black-driven initiatives, right? I talked about BMO Harris Bank. Right now, they have like an not unlimited, but it's about $50,000 you can go get right now, pretty much, right, for BMO Harris. It's called the Black Latinx Loan Program. As long as you have at least a year of tax returns from your business, at least a year. They have something else for startups too, but it's small. It might be 5 or 10,000 for startups. But this is a Black-driven initiative, okay? So any banks that have Black-driven initiatives, you want to look at those banks, okay? Also, you want to follow banks that have they're in your market, they're new, they just popped up, they're usually aggressive because they want market share. That is another way that you can get really good lending, okay? That's another way you can get that. And then also, any connections you have to board members, branch managers, and corporate execs. Man, I hope this has been helpful. I know you guys are listening. This has been helpful, guys. Put a 1 in the chat. If you understand things, put a 1 in the chat. I want to get your feedback on this. I want to hear what you guys are saying. I want to make sure that you understand. But look, I've been through this. I've seen this. This is not theory. This is not theoretical, okay? This is not theoretical, right? But it is exactly how they operate and work, okay? I just sat down with a lending institution. Thank you so much, Terrence, Raymond, Kevin, Ozzy, everybody. Thank you so much. This makes a lot of sense. So this is some of the inside decision-making of banking, okay? This is what they do. And they look at it, and honestly, guys, I'm going to tell you, 1 second. I feel like a professor, man. I feel like a professor over here. I'm going to put this back up for everybody too, right? The 5 C's, right? Just a reminder for those that want to hear that here, and I know we had some connection issues last time. The 5 C's: credit score, cash flow, assets that are lendable, economy, and assets that are for recourse, okay? For recourse as well. But like, look, when it comes to this money game, like, oh, thank you for doing that, team. Thank you so much. These are like fintech companies. Write these down: Square, Stripe, PayPal, Venmo, Wise Bank. These are fintech companies. They like new companies as long as you can show some form of activity and things like that. Now, what's the hack, right, guys? What's the hack? In the fintech space, because they operate with algorithms, right? there's a lot of ways to hack some of this to get even more lending. And what it is like, for instance, and again, you can do this. I've seen people, especially when you're struggling or you're scrapping things as an entrepreneur. You take your personal credit card, you make a payment right to your company. So you do a company. Obviously, you got to pay the 3%, but then that cash goes into the company, right? But it's from a credit card. But remember, that shows like basically as average revenue. So what you just did, you just boosted your own revenue, right? So you just boosted. So if you did, 10 grand, 5 grand on the credit card, and it went into your own company, you just boosted your own revenue. That makes sense, everybody, right? So that's one of the hacks I've seen. Okay, I've seen that hack quite a bit, and it works, and it works for a lot of people as well. Okay, so again, just to go through this, right? Fintech and bank lending, right? The 5 C's. This is more for bank lending. We're talking about this. This is more for bank lending. When you talk about, right, the checking account, right, situation, this is going to be more for, as they look at it, for bank lending as well, as far as your cash flow, what they look at and what they look for. If you have been denied by a bank, listen to me. If you have been denied by a bank, it's usually because, right, you did not follow the bank's initiatives, okay? You were considered high risk, okay? And you didn't have the right information. This is why I have this. 1 Million Black Men is built to help Black men win, okay? So I'm telling you now, right, if you've been denied by a bank, get with some of the fintech companies, right? And you can get lending through them, okay? We do have, again, obviously it's for purchase. For those that want to check it out, put it up there. We have the Black Business, right? The Black Business Funding Book that we created that really follows a lot of Black initiatives. And it's something we curated, we put together so people can have access to dealing with lending, but that follows the Black initiatives that we have. So the Black Business Funding Book, right? You can check that out and look at that. But I want to save this time now real quickly. I love this, to anybody that has any question about lending. Again, I'm trying to be more concise with these sessions. I want to get better. Again, I'm new to social media. I'm coming back in. I was on social media, man, for like 6-7 years, pretty much for the most part. I checked in like once every 6 months on something. But I'm back because I'm here to give information and help you win in your life. And that's really it for the most part. But any questions right now? I'm going to go through any questions real quick before we go into some things, right? Can you negotiate the APR? Okay, great question. So what I'm going to tell you is this. You can negotiate APRs, but usually you can only negotiate APRs once you have a significant position of wealth with the bank or the financial institution. What do I mean by that, right? You could probably use, I'm going to say a safe number is about $250,000 or more. If you're doing about $250,000 or more, you have deposits or more in that financial institution. If you're beyond the FDIC insurance of some sort, that's when they start to negotiate your APR. So you can get that APR drop. Your credit cards are cheaper. It's funny, but this is a true story. The wealthier you are, actually, when it comes to the finance world, I'm not saying this is right. Listen to me. I'm not saying this is right. Okay. The wealthier you are, actually, the cheaper money comes to you, or the cheaper money becomes. So it's this thing, right? Getting to your first million is the hardest. You've heard that said before. But after you get to your first million or whatever it is, then all of a sudden things get a little bit easier and cheaper when it comes to banking. Why? And this is why. Let me tell you why real quick, and we'll wrap this up. Okay. Why is it easier or cheaper the wealthier you become? Okay, ready for this? So let's say the person has $10,000 in the bank. Okay. So you got $10,000 in the bank. Okay. Remember, the bank overnight, they trade your money for money. The banks trade money overnight, right? There's something called LIBOR, the London International Bank rate. Okay. They trade money. Literally, I want you to think about banks moving forward and financial institutions. Like you think about any, grocery store or any business. They're in the business of money. So when you put your money there, banks literally are trading your money. They're trading your money back and forth, okay? As if, right, like it's a product. So your cash is a product that they basically trade back and forth. So when you have $10,000 and the bank wants to make 1% off your money, okay? If they make 1%, that's only $100, okay? You made them $100, okay? Once you have $1 million, all right? Once you have $1 million inside the bank, hey, thank you, you guys. I know you guys are listening. I love this. I love our audience that they like to be educated and they like real information. I love that. So once you have $1 million in the bank, and now they make 1% off your money, right? What's that number, somebody? Somebody help me out, right? Right? What's that number? 1% of $1 million, real quick. Thank you. Thank you, everybody. It's $10,000. Okay? So the bank is able to make more money with somebody that has $1 million in the bank than someone who has 10,000 in the bank. So now they're more willing to negotiate with you because they make more money off of you, right? It's like you're a better client coming to you and saying, hey, you know what? Instead of paying you in 7 days, can I pay you in 14? Why are you willing to negotiate? Because they're a better client. You make more money off of them. They're more, right? So you can negotiate APR. Are there any more questions? Thank you for asking that question. Great question. Whoever asked that, great question. That is a great question to ask because a lot of people don't know that or not. All right. All right. It says, what's the advantage of a 5-year acre on home finance? Okay. 5-year acre. I'm trying to see what that means by that. I think I know what you mean, right? But I think you're talking about owning a home for 5 years, or having a home for 5 years. That's what I believe you're talking about. And basically what all that means is that when you have a home for 5 years, they know that you're not in the investor trading, flipping business, and you're a homeowner. So it means that you're vested in that place and you're vested in that home, which you're more willing to pay. Somebody you'll hear a lot of times banks say, oh, is this if you want a line of credit, is this your primary home? Oh, if you want this, is this your primary? Is this your primary? Or is this your first or second home? Because usually people have a first or second home, and those are the main houses that they essentially, right, they're going to make sure they pay, even in divorce, even in things that go wrong, they're going to make sure that they pay that with a first home or a second home. So I want you guys to know that's where that comes from. Any other questions? Any other questions? Thanks for that. I think that's what you were asking. I don't know for sure. Do you always need business credit to get a bank loan? Interesting to say that. I think what that question is, do you always need business credit? What I'm going to say to you is that yes. No, here it is. So when it comes to lending with businesses, when it comes to lending, period, particularly with whether it's a business, a bank, or a fintech company, we went through fintech tonight, okay? When it comes to this, banks are looking for two things, right? Either they have an initiative that they're going to offer you money for, or you have a business that lowers their risk of default, okay? So, do you need business credit like Duns and Bradstreet? I think that's what you're asking. I'll get to that too, but let me just say this. When it comes to bank lending, okay, they're trying to limit their risk. Banks limit their risk, period, right? So you can walk into a bank and many times show your taxes. If you got a business, let's say you've been doing 3, 4, 5 million a year, right? This just happened to me on a business, okay? You can walk into a bank if you've been doing millions of dollars a year with your bank, a year, and you can prove it, it's taxable, right? Now all you got to do is have a relationship and put cash in that bank, and now that bank will usually lend to you, or they'll usually do that. When it comes to Duns and Bradstreet, which I think they're talking about as well, that usually is a government requirement, okay? Some major corporations also require Duns and Bradstreet, okay? It's good to have a Duns and Bradstreet number, okay? I have not seen, let me just say this. Now, I don't have a lot of government contracts, okay? I don't have a lot of government contracts. But I have not seen where Duns and Bradstreet has made a significant difference when I'm working with banks or dealing with lending. What I can say to you, this is what I can say to you. It is better to have Duns and Bradstreet than not to have it, okay? It's better to have it. Sometimes I feel like it's used, and again, I'm talking to black men, talking to black people here. I do feel like sometimes Duns and Bradstreet is used as a tool to eliminate people. The same way people use it as a college degree, they use Duns and Bradstreet as a way, right? As a barrier of entry to eliminate people from the pool. So I'll just say that out there that I've seen, but it's better to have it than not to have it. All right, any more questions tonight, guys? Any more questions tonight? One more question. Okay. If you are self-employed and you think that's claim very little on your taxes and you want to refinance, what is the best way to get equity or to get capital? Okay. So I understand this question, and this is a great question, guys, and I want to put this out there, and it's really good. When you're self-employed and you're making a decent income, especially like a couple $100,000 a year, you're always trying to limit the amount of money, right, that you have to pay Uncle Sam. Listen, look, it's legal. The tax code is built for you to take advantage of it. So let me make it very clear. Tax code is built for you to take advantage of it. But what happens, and remember I told you about that number? Oh, right? What are the 5 C's? Right? Cash flow. Right? So when you don't claim income, taxable income, it affects their ability to see your cash flow. Okay? This happens with a lot of black businesses. There's a lot of black businesses that actually make good money, but they don't show any cash flow. So what you got to do, you got to get very strategic with your accountant. Very strategic with your accountant. Okay? And you're going to have to sit down with your accountant. We can get into this another time, not tonight. You got to get strategic with your accountant. And guys, what you have to do is that you have to, right, start to claim income on your taxes, know what you're going to pay in taxes. So whether it's $10,000, $20,000, but you're doing it so you can show cash flow, and you're doing it for a reason so you can go get lending and go use other people's money. Okay? Understand the premise to lending. Let me just say this real quickly, right? If you're self-employed, like start to claim something on your taxes so you can get lending. Here it is. You will not get rich, wealthy, and the like. And I want my team to put this up there. If you don't use OPM, which is other people's money, okay? At some point, whether it's a bank's money, whether it's investors' money, whatever the case is, you gotta get to other people's money. Now, if you're a startup, I'm not gonna say that to you. Now, unless you got a tech startup and you're gonna have a ton of investments and stuff like that's great. But you gotta get good at using other people's money. Other people are putting their money in banks, fintech companies, whatever they like. And what I want to say to you guys is this: their money's there for you to use. That's how this game works. Look, I didn't create the rules. All right? I didn't create the rules, but I do want to give you the tools. Okay? I want to give you the tools, although I did not create the rules. So here's the tool. Okay? The tool is that, brother, sister, whoever's on here, okay, please be strategic about claiming income on your taxes enough so you can go get the bag. You can go get some loans, some lines of credit, right, to help you grow and expand. You're going to need it, right? In this life, in this American system, you're going to need credit. So know these 5 C's, right, when it comes to lending assets, right? Understand it here. Understand how it works. Average daily balance on your account, okay? All right? Understand with fintech companies, they're looking at your revenue. They got your data. Use their loans. Use it. No problem to use it, okay? Now, I'll say this last thing I want us to go to. Let my team know if you could put up put up the Black Business Funding book so they can get access to that if they want that, the Black Business Funding book. If they want that, you can get that. And then also we're going to play some of our testimonials and stuff. Look, I'm looking forward to this. I'm getting better at this, guys. Came out pretty rough. We got a lot of people. We have over 10,000 people who've joined us. But I'm getting better at this. I told my team today, I said, man, just being straight with you guys, I'm like, man, the thing is the social media thing is funny because I really every day I do a business. I'm in businesses and I'm running and operating companies, right? So like this online world's not my business. And so I told them, I said, I'm not gonna be like the folks y'all see every day on Instagram and y'all see on Facebook. I'm never gonna be that guy, right? But I realized because I like the other game too much. I like offline business way too much. Like guys, and I know don't let these folks online fool you, man. Dude, offline, there's so much. Like Dr. Marlon, what we're about to do with Dr. Marlon is about to be crazy. Like, dude, you could get $1 million contract, like $1 million contract, a $7-10 million contract over 5 years. There's so many things you can do offline. Online business is great. I love it. It works. My boy from Yale, they just got a bag from P&G. Like, oh, I mean, look, I love it, right? But let me just say this to you, right? I see a lot more people making a whole bunch of money offline. I use the online knowledge to make a whole bunch of offline paper. You know what I'm saying? That's what I'm saying, everybody. But we are trying to get better. I am trying to get better, and I do want to be excellent, and I do want to compete. I do want to compete online, like in an era, but I will let you know, we're never going to be like everywhere all the time, you know, No, we're never going to do that. We're going to do some summits. We'll do some challenges. We'll do some events. We'll put some things together, but I want to make sure our content always stays rich and we're helping people think. I think in this day and time, my biggest challenge with everything is that we're not helping people think. Okay. So I want you to think. I just don't want you to know, oh, hey, go sign up for this credit card. Oh, go do this over here. That's all great. But now you have framework. Okay. You know how to think about your beginning balance, ending balance, average balance. You know how, right? The like credit score, cash flow, asset economy, assets. Like this is stuff. Guess what? Those promotions are going to end. People telling you to go run, oh, go get this business grant. Oh, go get this free money here. Oh, go do that. Guess what? All of those are going to end. That money's going to come and go. Okay. Right. That's going to come and go. Okay. But what I will tell you is this, the 5 C's, that's been around for decades. That's not going to change. Right? Looking at your average daily balance, that ain't going to change. Hey, if you got $10,000 in the bank only making $100 a month off of you versus somebody who got $1 million in the bank and the bank making $10,000 off of them, I'm telling you right now, that's not going to change. Those are real principles. So our goal here at 1 Million Black Men is to help Black men win. We want to help Black men. Look, everybody can join. Listen, but we want to help Black men win, right? So that we can have wealth creation for 7 generations, okay? So that's the goal to this. That's what we're doing. Man, I love all you guys. It's been a great time. We're trying to get better, stay concise, stay shorter. But please play our testimonial videos. If you want to work with us, let us know. Reach out. Again, we're trying to get better at that. Okay, get the YouTube together. Everything get designed. I'm gonna get there. Y'all just be patient. In 3-4 months, y'all gonna be like, man, they told us. Like now we got tens of thousands of people in here, right? Now we got tens of thousands of people in here, and it's crazy. But I told you guys that. Let's play that video. I'm going to let you guys go, and then we're going to end with our anthem, calling all Black men, calling all Black men. Love you guys. Hey, I'll see you at the top, baby. Why? Because the bottom is just way too crowded. Man, I'll holler at y'all. Thank you guys for joining.
I met Dave about 4 years ago. My first business cracked 7 figures, and it was actually an interesting time to meet Dave because I oftentimes say you can't just be wealthy overnight. You actually got to have somebody to teach you the game. And DA kind of stepped in and took me and my business partner under his wing and showed us how to kind of maneuver this very dangerous game that we play called business. And within 6 months, DA was actually able to help us obtain a $200,000 line of credit. And then 6 months after that, he actually helped us secure a $3 million line of credit that we were able to obtain in real estate.
After sitting down with David and going through some ideas and some concepts, in the first 6-7 months, I think we did roughly about $10 million together. It's an exceptional program, and David did something for me that no one else had ever done. He taught me the power of global expansion and really understanding the importance of an international network and how we can build on that network. Him and I have done projects that surpassed the $20-30 million mark. My life has changed in more ways than one for the better from the development of our relationship. And I'm just so happy that you have brought me in to the fold and have shown me how important the power of a network internationally from a professional perspective or a personal perspective can be, and I'm ever so grateful.
Calling all Black men. This is a call to action. This is a call to action. An action call. Calling all Black men. This is a call to action. This is a call to action. An action call for 1 million Black men. I am Kwesi to put you on a call path to win. This is not a Zoom call or a call on Facebook Live. Though we are virtual, we are live. Not a call on TikTok like MLB Black Men, we are on the clock. Not a call from Snapchat. Move back my bat. We are on first base to Isaac Hayes Jr. fan base. We have an eye lie on third base. Grand Slam, not a call from Instagram, as we don't need validation with blue checks. We are the true checks. We do checks. We write checks. We are the right checks. We do family checks. We check in on our sons and our daughters. We are black men who walks on waters because our children like to FaceTime. We are black men who FaceTime. Let's FaceTime. This is still not a call from an Android or an iPhone. It is extraterrestrial to phone home. I know sometimes black men, we have to travel around the world to be appreciated at home. But you are not alone. You are in the each one, teach one green zone, where the elusive weapon is the truth. We are the black truth. We are Paul Pierce, the truth. We are the loot. We are 1 million black men strong. We will get along as we landline. We walk across their blue and red line. Now this call is from a landline with rotary numbers and a coiled cord. We are 1 million black men on one accord. This cord and phone transmits a dial tone, whether a local call or a call of long distance. Regardless of the distance, it connected us. Social media unconnected us. Our homes need us. They soul feed us. And not just food that give us niggas itis. I write this, our homes bleed, sweat, tears for us. Black men, it is up to us. It is on us, not to just procure the bag. Buddha bless one, share it with me. Get the info under your afro, bro. And establishing sovereignty to be a one united bank for economic just us. Black men, we must set up a family trust to an estate, because right now everything is at stake. Because we can't lead from behind, from your behind to your mind. They are public with their relevance as they use artificial intelligence in this age of information. Elon Musk bought Twitter to gather more of our information. So if I have to be the Starlink, I will break the Starlink for 1 million black men. But I won't condone our culture with misuse of our information. So I grant you David Anderson for this financial literacy education. DA went from shy Southside streets to JP Morgan, Goldman Sachs on Wall Street. From Chicago State to Harvard. At 19, he fathered the economics in his family house. DA served in President Obama administration at the White House. He lived in China for 3.5 years, learning the Chinese economy, the renminbi. To the British pound, black men, let's get this pound. To the European euro, we NBA step into the euro. To the Uganda chilling, black men, let's be empowered by our billing and be willing to learn and understand. Money is just a tool to build unshakable wealth. 7 generations deep that DA will teach that we can compete in an economy beyond that's local. Black men, we must think global. So I present to you David Anderson to put you on this financial literacy path to win. Welcome to the movement. 1 million black men.